The NSE up 36 points today from yesterday's close. What were the drivers of the market?
Thank you for having me. Actually, it's not really surprising seeing the market going up. And we've had second day now hit the 4,600 point mark. And last week we only had these levels reached twice. And I look at last week and looking at the average at 4,537 points, we have today's recording 100 points higher than that average. So things are looking positive. As for the drivers, I'm looking at general market correction coming to an end. We're actually seeing a clear trajectory of where the market is headed and what it should be like. And we're seeing Safaricom gaining some stability. We saw it gain also today. And knowing that it trades more than 50% of the stocks daily, it's a key indicator of how the market will perform looking forward.
All right, let's talk about other counters to watch. The expert view is EABL, East African Breweries Limited, last week announced a management shakeup. What are investors expecting this management shakeup to do for the company going forward?
I see this as a normal move. I don't think it's something that will change the fundamentals of the company, at least not negatively. And if anything, a management streamlining, as I would see it, is for the better of the company. What I heard is that they are merging most of their key branches, most of their key departments, and streamlining the human resource they have in a bid of increasing output. So looking forward, I would say it's a good move. And also looking at the results which were released about a month ago, they were really promising, they were good. And looking at the market sentiments, it's still positive. So going forward, I say it's a good stock.
All right, so as EABL rationalizes for better output and hopefully better performance, what about Scan Group? It's also performed well recently, good results, but also experts saying they've benefited from these telecoms wars between Safaricom, Zain, Kenya, and other players in the market.
Indeed, it has. And in more than that, I would say, Scan Group also had good results out for its financial year. It's a company that finds itself in an industry thirsting for more services, and that's the advertising industry. And also looking at the deal they struck with Bharti is for the rebranding of Zain. And that's, I think, a big contract that should see them handle their corporate identity, marketing, and advertising. Looking today at this company stocks on the market, we see it hit 61 shillings, which is actually 24 shillings higher from what it was in July when it was trading at 36 shillings, which is about a 64% rise. Looking forward, I would say we have a lot of room for growth, and I don't think it has reached its resistance.
All right, Centum Investment Company also one to watch. They had their AGM on the 24th of September at the end of last week. Basically, shareholders happy with the direction being put forward. The company asking their shareholders to approve a possible cross-listing in Uganda. Shareholders say it's A-OK. How much value will this add to the Centum Investment Company?
I think it will add quite a lot of value. We have seen most of these financial institutions move regionally to East and Eastern Africa. I think Uganda has been seen as a potential hub for growth. We also had Equity Bank and KCB move there. And I think looking at what Centum deals with, which is primarily investment, I think it's promising. They say they wish to have, as one of their midterm goals, 50% of their operations outside Kenya. And I think this is a footstep in that direction. Also looking at the key areas of investment Centum deals with, we have the equities, we have the unlisted equities, and we also have the real estate, which is the property market they moved into recently. I take it to believe the Centum acquired some land in a peninsula in Uganda, and I think this is quite promising. I'm looking to see what they'll do with this.
Housing Finance Company of Kenya also in the spotlight. They gained 1.92% today. Positive sentiment after a bond issue. Yes,
HFCK actually has had a lot of positive market sentiment from investors. The bond uptake has been fairly good. It's began last week on 20th September and should close on maybe the day after tomorrow, 1st October. And I think that has also pushed the demand up for the equities, and looking at what they want to do with the money is to increase onward lending, that is for mortgage finance, and this is an area they are quite adept in, and they also want to increase their market share in the industry. Right now they are ranked second after, I think, S&L, so they wish to eat back on what they're losing in terms of market share, and I think it will be quite successful. Also looking at the coupon rate at 8.5%, looking at how they have divided it into 3 tranches. We have the 5 million first, 3 million, then 2 million. I think it's quite wise spreading it that way.
Let's talk about the banking sector, because we're headed into the 3rd quarter, and as from next month, we're going to be seeing results coming through. What are your expectations for banking and the results we may see?
I expect to see a lot of good results, a lot of flashy growth, and in terms of growth, we see double and triple digit from the same period last year. Most of these banks did a lot of spending, and most of this spending was in expansion and IT infrastructure. Particularly if you take Equity Bank, they also did a lot of spending on IT and also expanding. So we expect this 3rd quarter results to be less any spending that would have otherwise been spent on that. So we expect better results. Looking at the sector in general, looking at the equities in the market, sectoral PE average of about 16, it's good looking forward. And I think it's promising, and we are yet to see more growth.
Okay, what we have seen also is many of the financial institutions, Robert, raising capital through rights issues on the market. How viable is this strategy? We know Kenya is recovered and giving good returns, but is this sustainable?
Yes, I think it's sustainable, although maybe it will become too much if we see most companies having rights issues as a means of raising capital. We have already seen HFCK maybe shy away from that. It could have been an option from one of the advisors to maybe go for a bond issue, considering also 2 years ago they had a rights issue which they raised 2.8 billion. And I would not pour too much water on it, because after all, the rights issues that have been released to the market have been successful. We've had KCB, who acquired 12.4 billion, which was way above their target. We have also had TPS Sena, who recently released the results for their rights issue, have 37% oversubscription, meaning actually there's appetite for credit. And this appetite for credit also translates to more business for this commercial sector, I mean the financial sector, and the banks. And I think looking forward, there are other avenues, but rights issues seem to be the pick of the day right now.